In this video, I'll take a look at what the difference is between binary options and Forex. So the first thing that I would point out is that binary options have been heavily regulated out of existence by a lot of countries around the world. And they do have a bit of a black mark against them right now because they're extraordinarily risky. However, that's not to say you can't trade binary options in a safe and manageable way, just that the industry is probably about 10 years behind Forex in its regulation and adaptation. So it is a bit of a fluid market right now. A binary option itself is simply a bet as to the direction of an asset. So, unlike Forex, binary options can be on just about anything, because Forex is foreign exchange. It is currency. And with that in mind, the markets are much more dynamic, if nothing else. And as a result, you need to keep in mind that it does offer a bit of flexibility when it comes to what you are trading. So, for example, you could trade crude oil or you could trade gold or whatever. So let's just say you are trading crude oil and you believe that the price is going to be above $45. And, you bet a certain amount of money. I'll keep it simple and just say you put $100 in a binary option and you believe we will be over $45. Well, in a binary option, there's a certain amount of time you have to have it done with. So, for example, if you decide that crude oil is going to rally over the next 24 hours, well, 24 hours from now, you have to see whether or not the price is above 45. And if it is, you get the payout. Now, the payout is anywhere from 80 to 90% of what you're risking. So let's just say it closes at $46. Well, you've made money. In this case, maybe you get 180 back. You make an 80% return, and that's great. So the catch is, if it's below 45, then you lose all 100. There is a little bit of safety built into this, though, because you won't lose anything more than that. Period. End of story. It doesn't matter if oil falls to $11. That's all you lose. Now, for those of you who know anything about statistics, you should recognize the problem right away. So when you win, and, say it's a generous broker, you get 90%. But when you lose 100% of what you are trading. That means you have to be extraordinarily good. Your win rate is going to have to be much higher than it would be, say, in the stock market. Because it is a fixed win or loss. For example, if you're trading stocks, you might have one that gains 300%, and you might have 320% losses prior to that. Well, you're still profitable in that scenario. In the binary options markets, absolutely not. And in fact, you'd be in real trouble.